Hi everyone, very good evening. मेरा नाम कृष्णा कुमार यादव फ्रॉम Altport Expert India. बेसिकली Altport Expert India एक डिजिटल प्लेटफॉर्म है जहाँ पे आपको AIF एंड PMS को पूरी जानकारी मिलती है एंड वी आर वन ऑफ द फास्टेस्ट ग्रोइंग प्लेटफॉर्म इन इंडिया. जो कि ये प्लेटफॉर्म मिस्टर विकास अग्रवाल जो कि फाउंडर एंड CEO है इस कंपनी के, उन्होंने स्टार्ट किया 2020 में. AIF PMS आज के डेट में almost 138 कस्टमर को, more than that almost 638 करोड़ रुपीज का फंड मैनेज करते हैं. माई सेल्फ कृष्णा यादव जो कि 10 ईयर के एक्सपीरियंस है ऑल्टपोर्ट एक्सपर्ट इंडिया. मैं लास्ट 3 ईयर से काम कर रहा हूँ और मैं अभी तक 121 करोड़ रुपया मैनेज करता हूँ. आज के डेट में मैं खुद 68 कस्टमर को हैंडल कर रहा हूँ, जैसे अल्ट्राशनल एचनाई क्लाइंट AIF एंड PMS से. उसके साथ साथ ये कंपनी एक एंड टू एंड सर्विसेज प्रोवाइड करती है कस्टमर को, और उनके टेलर मेथड्स हम उनको बेस्ट प्रोडक्ट प्रोवाइड करते हैं. इसी के साथ मैं वार्म वेलकम करता हूँ आपको, आप लोग इस वेबिनार को ज्वाइन किए. आज मैं इंट्रोड्यूस करूंगा मिस्टर नितिन जी को, जो कि नितिन मेनन, जो कि लास्ट 20 ईयर का एक्सपीरियंस है, अनुभव है इस फील्ड में. उन्होंने इंडियन एंटरटेनमेंट इंडस्ट्री को फाइनेंस और लैंडस्केप काफी हद तक सेव दिया है. उनके लीडरशिप में 40 से ज्यादा ब्लॉकबस्टर फिल्मों उन्होंने फाइनेंस किया है, जहां पे जैसे सबसे बेस्ट फिल्म उनको देखेंगे मिस्टर धोनी, पूरी, गोली बॉय एंड वार. जैसे हम बता सकते हैं, इससे पहले नितिन जी यस बैंक में इंडिया के सबसे बड़े एम फाइनेंस फ्रेंचाइजी को स्टेबलाइज किया है, जिसे उन्होंने मार्केट लीडर बनाया था इन स्पेस में. वो सिर्फ इंडिया तक सीमित नहीं है. नितिन जी ग्लोबल एक्सपीरियंस भी इम्प्रेसिव है, having worked in investment and research with the leading international firms like Credit Suisse, CIBC और Oppenheimer. साथ ही KPMG ग्लोबल सर्विसेज में इन्होंने इंटरनेशनल टैक्सेशन के फील्ड में भी काम किया है. नितिन जी का थॉट लीडर भी है. उन्होंने स्कॉम के साथ मिलकर एक लैंडमार्क रिपोर्ट एंड को ऑथराइज की थी, जिसका स्क्रिप्टिंग सक्सेस फॉर द इंडियन मीडिया एंड एंटरटेनमेंट इंडस्ट्री, और आज भी वो एक्टिवली इंडस्ट्री फोरम और नॉलेज प्लेटफॉर्म के हिस्सा बनते हुए हैं. तो चलिए इसी गर्मजोशी के साथ हम करते हैं नितिन मेनन जी को. मिस्टर मेनन, वी आर एक्साइटेड टू हियर यू. इनसाइड द फ्लोर इज योर्स. वेलकम.
Thank you, Krishna. Thank you for this warm welcome.
मोस्ट वेलकम सर.
Yeah, great. So I hope everyone understands what I'm presenting in terms of a new alternative asset class. So film financing is what NB Capital stands for, and this is what we've been doing over the last close to 2 years now. Even in our previous organization, we used to run this vertical, and this is truly a new asset class that we are trying to pitch to your investors, so that they understand that film financing can be an asset class that one can look at, and this can be one of the alternative investments in the private credit space. So NV Capital in brief is a private credit AIF which deals in film financing as an investment theme, as an investment asset class. So this is what we specialize in, and this is what we've been doing over the last couple of years. And we thought that your platform could be another enabler for us, where we could tell your investors that this could be a good vertical to invest in. Krishna, I will go through the presentation, and then I think will it be able to, can I share it, or is it possible?
Sure, आप प्रेजेंटेशन दिखा सकते हैं, आप शेयर इट करके.
ठीक है.
That will be great. Yeah.
Okay.
Thank you. तो नितिन जी आप प्रेजेंट करने वाला, मैं शेयर करूं आपको?
I can present it. Can I do that?
Yeah, sure. You have authorization.
So is it visible now?
No.
Can you see?
No, sir.
I think there is a problem in the sharing.
So no issue. Can you share me so I can share it?
Sure. Can I just email you right away? This one?
Yeah.
So gentlemen, so the scheme is basically, as I said, it's a AIF category 2 debt fund. We purely are a private credit fund. Whatever we do is in the form of debt. So at peak size, we would be a 500 crore fund. As we speak, we already have invested in close to 8 projects, and we've already exited 5 projects. So this, in terms of a private credit, in terms of our capital allocation and deployment as well as circulation of capital, we have already exited 5 projects in under a span of 18 months. So that shows that, you know, the credibility in terms of investment as well as ensuring that exits are in order. The gross IRR, coming to that question, is it is in the higher 20s, you could say. One of the reasons is because this industry technically does not get a lot of organized capital per se, and we are India's first private credit fund in the film financing space. And the reason, since it doesn't get a lot of organized capital, the alpha that we generate will be slightly on the higher side. So as we speak, we would be the only fund in the private credit space giving a return that is in the higher 20s in that sense. At the investor level, as we speak, our returns are close to 20% after removing up our management fee, after removing up the expenses and the carry portion. The interest that we intend to pay clients is annually. And right now we are in that space where we've been able to deliver the returns over the last 18 months. We have distributed thrice, because though we're looking at annually, we are right now giving it semi-annually, and we've been doing it pretty well in that sense. Now, the other part is the investment strategy. As we go on, I would like to, I will tell you about how our investment strategies. But before that, I'd like to just walk you through how the investment in this industry happens and what has happened over the last 10-15 years in this space. Can you go to? I'll just tell you the walk. Just one second. Go to the next slide, Krishna ji. Yeah, next. Krishna ji, next. Yeah, just hold on this slide. So folks, one of the reasons why we picked, or we've been doing this asset class, is we've seen this industry over the last 15-18 years. And this industry we've seen as going through a metamorphosis over the last 18 years. I would say right from 2008 was the starting point. I would say 2006 to 2008 was the starting point, and it has sort of fructified, or that whole process you could see has come to being in the year 2017-18 when OTT came in. So in 2000, when the industry was still in the nascent stage, when there was only theatricals, and that was the dominant theme, where, you know, pictures were, you know, you could always say whether the pictures were a hit or a flop only on theatrical level. And since then, you know, new revenue streams have always come into being, whether it is, you know, in the form of satellite, whether it is in the form of music, whether it is in the form of overseas, whether it is in the form of ancillary dubbed rights, or you could say the new dominant theme called OTT. And since 2018, all these streams of revenue have got so big that the non-theatrical, that is excluding theatrical, today accounts to about close to between 70 to 100% of the cost of production. So these revenues have become such a substantial chunk that, you know, the industry has moved forward, but capital has not caught up. And that is the reason we said that, you know, the right now the need of the hour for us to ensure that, you know, we are in a position to deploy organized capital for the industry. So if you look at post 2018, you've got theatrical revenues, which is still a big stream of revenue. Then you've got broadcasting revenue. Then you've got music. Then you've got OTT, which is a huge stream of revenue, overseas, and dubbing rights. What do you mean by dubbing rights is, especially when you look at a movie down south, when you look at, you know, whether it is Tamil or a Telugu or a Malayalam, there is a huge probability and a possibility of that movie getting dubbed in Hindi. So that is the reason why regional movies have an extra stream of revenue called dub rights, where those dub rights, you know, you can translate them into Hindi and can be sold to multiple OTT and broadcasting platforms. And this is where, you know, NV Capital comes in, because as a theme, we look at providing capital to the industry based on non-ancillary revenues. We don't take a punt, or we don't get into the theatrical aspect of the industry. We go only on the non-theatrical aspect of the industry. And non-theatrical aspect, if you look at it, the streams of revenue of non-theatrical itself is now close to 75 to 100% of the cost of the movie. And this is where we feel that, we can provide capital and we see fructification of cash flow. So irrespective of whether a movie does theatrically, the non-theatrical portion is where we see cash flows and based on which we lend capital. So this becomes our, bedrock, or this becomes a foundation on which we extend private capital to the production house. And this has become a very big important stream. And if you look at it, all the private capital providers, who are not in the organized space are looking at providing capital to a production house based on these streams of revenue. Krishna ji, let's go back to the first slide. Yeah, again, just to going back. So this is how we extend capital based on the fact that because over the last 15-18 years, we've seen streams of revenue coming, and we feel that there is a need for organized capital to be in this space. And when we mean by organized capital, we mean like firms like, AIFs, category 2 AIFs, or probably NBFCs, as you see in the future, would participate in these streams of revenue. And since we are a private credit, the fact is that debt by nature, if you look at the foundation of debt, it has to have cash flows. Fructification of cash flows, either in soft form or hard form, is predominant or is the basic thing on which you can lend capital. And this is how we look at it. So we generally never look at lending capital when you look at look at the whole space of how you intend to extend capital. We have a very big framework in which we can say below, on which we identify, saying that, okay, this is the framework on which we extend capital. Krishna ji, can you just go to the next slide? I'll just tell you where to stop. Next. Okay, yeah. So this is if you look at the whole movie space, the movie space is split into three parts. The big three parts, you could say. One is the pre-production space, one is the production space, and one is the post-production space. The pre-production space is what we look at. We look at avoiding in the truest form, because we feel that is the riskiest part of the investment cycle, where we don't know how the project is going to be stitched up, who are going to participate in the project, how the project is going to look at, and that becomes one of the riskiest part of it. As a credit provider, we have to know that our capital is safe, and there is someone that the project is sold to, and we know there is some cash flow visibility at the end of it. And the production space is what we try to focus on, and the production space is where the bulk of the capital goes. And that is where we see, okay, we know that there is going to be a sale, there is going to be someone ready to buy the project, and that is where we get into, and that is what we extend capital. Because at the end of the day, cash flows have to be important. Cash flows have to be fructified in some form or the other, and that is where we like to say that okay, we are ready to extend capital to the production space. So we don't participate in the pre-production space, where the riskiest form of business is. We only look at the production space, where we know that there would be the project gets completed, and it is being able to it will be sold to any of the platforms on which we would be taken out in some form or the other. So this is predominantly where we participate in the production to the post-production space, where the bulk of the capital is, and our capital gets taken out by the person buying the project at that point of time. Krishna, let's go to the first slide again. So in that sense, our investment strategy is, if you look at it, it is mid to late stage. We get into the production space. The production space is where we feel that where the project we know gets life, and we know that the project has a shelf life, and the project can be sold to somebody, whereby which the project denotes or gets its value because it's in the production space. The second thing is cash flow, because we know that when we get into the production space, there will be multiple buyers to look at the project, and that is where we intend to participate in. The third most important point is we do only with reputed production houses. What do you mean by that? Those who have done projects in the past. Because inherently there are two types of risk when we look at it. One is the production risk, and one is the saleability risk. Saleability risk is when you get into the production, there are enough buyers in the market. We know that at some point of time, unless that is there, we don't participate. So when we know that there is a soft comfort in some form, or the paperwork is being signed in some form, the capital gets released after the release of the film. That is when we start participating. So the saleability risk portion is completely taken off. The production risk, how do we ensure that the production risk is also taken care of? We need to get into players who have done enough projects in the past, and that is where we ensure that there are people who have done enough projects, who have executed, who have sold it, who have seen the entire life cycle of a project. In typical words, in a real estate parlance, I would say you would look at the best of the names in real estate players who have constantly done activity in the past. We know that they have constantly built land, sold land, and seen that entire life cycle coming into being. That is what we also intend to participate. And even if you look at, even from a real estate perspective, just to draw a parlance, though I know we are looking at an intangible and a tangible asset, but just to give you a slight perspective on that, the real estate process, when you look at the basic foundation level, seems to be the toughest, where you need to, the clearances come into play, whether you need to get the project up and being. But once you get into, the first level slab, the second level slab, it becomes sort of easy. This is where a project is in the production space. That is what we intend to finance. We know that the project gets color at the end of the day, and it can be sold. And we know that at some point of time the value of the project increases substantially, as well as in terms of the cash flow and the whole cycle of that project, and it gets and we are taken out in that process as and when it gets sold to the highest bidder for that project. As I said, we look at mature production houses because it is a part of, it's just in collation with what reputed production houses are. Both go hand in hand. We look at producers who have skin in the game in that sense. And skin in the game, I mean those who have at least gone to the pre-production space, who have put in probably 15 to 20% of their capital in that space. And so that we know that, they've started the whole project and we need to get only at the production space. As I said, the portfolio is diversified in the truest sense, because we look at a lot of the heavyweight South portfolios. We look at projects basically in Bollywood, in Telugu, in Tamil, Malayalam, and probably regional as we go on, probably Marathi, and so on and so forth. But so we try to ensure that the whole diversification theme is adhered to. As I said, self-liquidating is predominantly the fact that cash flows in any form is the foundation based on which we load our capital. Without that, we generally never even assess a project. The tenure of these projects are generally very short term. They are in the range of 12 to 15 months, and we ensure that at the maximum it doesn't go more than 18 months in that sense. So if you look at from private credit space, we are the shortest. We've got the shortest tenure for a private credit platform. And I think in that sense, the circulation of capital is faster. So we intend to at least circulate twice or thrice in the entire life cycle of our fund tenure. Next slide, please. So this is the fund terms of that. In terms of what we intend to do, as I said earlier, it's a 5-year fund. We intend to distribute interest, which is annually. Our hurdle rate is in the range of 10%. Management fee is 2%. Catch-up carry is 20%, and operating expenses is as per the actuals. Next slide, please. Yeah. So this is. I'll just give you an industry overview. Media and entertainment by nature has got huge traction over the last couple of years. The fact that the government of India itself now conducts a conference called Waves, which they plan to use as a huge soft platform for the world globally. So in that sense, if you look at it, media entertainment, if you look at the size of the industry itself, is close to about 230,000 crores. But the beauty of this industry is content is the foundation of this whole industry. So without financing or without building content as the base, this industry can't go forward. All these verticals, whether it is television, whether it is radio, whether it is digital, all of them require content, and content is the bedrock for this vertical, and this is what we intend to finance. Krishna, next slide, please. Yeah, I mean, next. So this is, as I said, this is the streams of revenue. So just to give people a perspective, and if people don't understand, see, when you look at the industry right from early 2000, theatrical was the only revenue stream for this industry. And theatrical, when you look at it, theatrical is also called, the word is called rights. Okay, for this, people who don't know how this industry is broken down, is when a movie is made, it has got multiple rights. So one right is called theatrical, one right is called satellite, one right is called digital, one is called music right, one is overseas rights, and one is dub right. So when a movie is made, it has got multiple rights that it can go on sweating, or it can go on selling. And as a fund, we look at non-theatrical revenue. So non-theatrical is, if you look at post 2018, what I've written, you look at broadcasting revenues, we look at music revenues, we look at OTT revenues. So this is the rights that are hypothecated, pledged to us, against which we lend capital. So in other words, the collateral for us is nothing but the rights of that movie. It is pledged to us. The cash flows is hypothecated to us, and all that is ring fenced through an escrow mechanism ensures that the broadcaster / the OTT platform gives ensures that the revenue is revenues routed through my escrow account. Next slide, please. So as I said, the industry is, if you look at the size of the industry, it's close to about 15,000 crores in terms of the investment that goes into this industry. And we are just at a small size trying to bridge that gap. So every year, close to about 15 to 18,000 crores of content is made across, whether it's OTT or whether it is movies. And there is a huge demand that, organized capital comes into this industry in a very big way. So as we see going forward, we feel that, as film financing as an investment asset class would really build up in the future. I think it's a question of time before you see multiple funds coming into this asset class, whether it could be on the equity or the revenue-based financing side or the private credit side. I think it's just a question of time. And we are trying to bridge that gap, and we feel that we have a first mover advantage in that space, and that is what we intend to build upon. Next slide, please. So this is, as I said, the investment in our film life cycle, how we intend to invest, at what phase we intend to invest. We intend to get into the production space, and when the movie is made towards the last end, and when it is sold, our takeout is from the respective platform who ensures that the capital comes into our escrow account. Next slide, please. So this is our selection process. In the first slide itself, I mentioned that, we have a criteria as to how we look at our selection criteria, who all are identified, and how do we extend capital to those production houses based on the criteria that they adhere to. And this is how we look at projects that we need to invest in. As I said, deal structures is very similar. It is we look at purely, it's a mid to late stage investing that we look at. They are short-term tenure investments. They don't go more than 12 to 18 months. Cash flow visibility is very critical, based on which we never look, unless we have clarity on that, we never extend capital to a project. And generally, our investment is generally not more than 50 to 60% of the whole project cost. This is how we invest in. Security structure, as I said, we have exclusive charge on the IP that is hypothecated to us. We do it through a escrow mechanism, and all the cash flows is routed through that. We generally, since we were bankers, personal guarantees and PDCs form a part of that process. And add to that, an extra layer of insurance always comes into it, assuming a project, there is some problem in the project. It is generally, the act of God, or the actor has an issue. There is insurance that comes into being, and that takes care of my facility too in that process. Next, please. So these are I'll keep this. This is just the questions that you all could have in that process as to what could be the reason as to why a project gets delayed, whether the theatrical revenues are sufficient. So these are just the FAQs that we can keep that as the later part of the question answers. And the next, please. So this is the last slide that I would speak about. In general, this is truly a new asset class that we're building on. The market requires a vertical, requires a new asset class in terms of film financing as an asset class, because the simple reason is we are the single largest producer of content in the world. We are even bigger than America when it comes to content. We produce in excess of more than probably 1700 to 1800 pieces of content a year, and we don't have a single organizing vehicle looking at financing this vertical. The fact that we have got 100-year-old industry, and this the film industry is close to 100 years old, and it continuously goes on building upon it. The last 20-25 years has been one of the peak periods for the industry, where you've seen right from theatrical to other ancillary revenues picking up in a very big way. And in that sense, I think the need of the hour right now is to provide organized capital to the industry, and this is where we feel that this is a new investment theme, new asset class which we can take advantage of. The returns that we give us are if you compare it to any private credit asset class, we're at least 1000 bips more than any other private credit in the market. IRRs are close to that, at the investor level is close to the 20% mark that we're hitting right now. And I think moving forward also, you could expect a return of 18% plus on this asset class as we move ahead. So in other words, this is a new investment theme. To a certain extent, we can say that it is recession proof, because whether we like it or not, in good times or bad times, content gives you a new high. It makes you feel joyful. You really want to watch something, especially in terms of in periods of gloom. So this is a good asset class for you to get into, because it helps you to get over the returns of what an equity asset class gives you. Second, it helps you in terms of diversification, and the fact that it is a non-correlated asset class. It has got absolutely no correlation with equity markets. So at the end of the day, you have best of both worlds. You get a return that is equivalent to equity, and which is to a certain extent disconnected from equity markets. Given the the volatility in equity markets, private credit in this asset class would be a good tool to explore. You can go to the next slide, please. So these are our current projects, which I can speak on too. But in a nutshell, these are the projects that we have done in the past, and we've already invested in 8 projects. We have exited 5, and as we move forward, we intend to increase our ticket sizes and expand our portfolio across the southern region as well as Bollywood. And this is what we intend to do. You can go to the price. Krishna, can you go to the previous slide, please? Previous. Yeah, you can keep this slide. The next slide. Yeah. So this is, I mean, for everyone, you can see these are the risks and the mitigants that we have, and you'll have a lot of questions around that. I would be happy to take them, but people, y'all can, I mean, the audience can just go through this, and if you feel there are some other questions, I would be happy to answer them. I would be free to take any question that y'all have in terms of this asset class.
Thank you, Nitin Menon ji. आपने काफी अच्छा explain किया, and let's check that audience का question क्या है, then we can know.
Sure.
Basically, audience पूछ रहे हैं आपकी surety क्या है, like कि how we sure कि return हम बना पाएंगे, because this first funds right in this sector, in media entertainments. So basically, surety क्या है कि हम इतना बढ़िया return दे पाएं?
See, the important factor is because we've been looking at this space for the last 15 odd years, and one of the things we've seen that private financing in this space continues to grow. So in general, private financing has always been in this asset class at a rate which is even higher than 24%.
Okay.
Slightly higher. But we feel that as an organized player, this opportunity continues to exist. And since banks and financial institutions are not investing heavily in this asset class, we feel that there is a huge gap that we can bridge. And that is the reason why we feel that there is this opportunity, and at a rate of about 22 to 24%, or you could say about close to in the 26% range, is where we feel there are enough opportunities that we can bridge.
That's good. And I can see second question, like some of the movie get stuck in the censor. वो
Yes.
launch नहीं हो पाते हैं. In that scenario, how you make the returns? If
Yes,
it is
see, the censor man generally na, unless it is a very controversial movie, generally pictures are censor पे अटकते नहीं है. So the censor जो आता है ना, they just tell you to do tweaks. So a picture never gets completely banned at the censor level unless it is an exceedingly controversial movie. And today I have not seen over the last few years, or I don't know when was the last picture that was completely banned by the censor. It has not happened for a very long period. They will change it. Probably you can from a UA to AA, or you could say that you can change the name, or you can change certain probably scenes or something like that. But a movie is generally never banned at the CBFC level.
okay. I got one more question. What is the minimum investment and minimum holding period, and promises return? Minimum promised return, how much?
So right now, if you look at the returns, we are giving returns close to the 20% level is what we are looking at. In a pitch deck, it's about close to 18% is what we have put as the return. The minimum ticket size, because it's an AIF category 2, the minimum ticket size is 1 crore that we can look at. And it's a close-ended fund, so it's a 5-year fund that we look. So till probably 2030 is what we are looking at in terms of releasing capital back to the investors. And this capital is recycled for a period of at least 2 times, for at least 2 or 3 times, you could say.
Great, sir. Thank you, Nitin Menon ji. Thank you for the just webinar.
Okay.
Great. Bye.
Thank you so much.